What does it mean to capitalize an asset? Now, this is much more textbook. And for some of you that are more sophisticated business owners in real estate and investing, it is critical. Those of you that are business owners that are buying capital equipment, critical on how you're going to do the books. So I'm going to actually go into a lot of the technology of it, but I'm also going to end with a $1 trillion tip of what I think the most important capital in your company is. Stay tuned to the end for that. All right, so let's just talk about how do you capitalize an asset, and I'm going to actually read some of this because I want to make sure you're all getting exact definitions. So capitalizing an asset means recording an asset on your balance sheet. Remember, you have a P&L on a balance sheet, right? Your income and expenses is your P&L, your profit and loss. Your balance sheet is the asset side. And I can tell you, bookkeepers and accountants completely, it's shocking to me how they do not actually record from as simple as a real estate transaction or a capital expenditure and how you can do a depreciation schedule on an asset. So for example, like when I bought my plane, which was a capital investment in the plane, I had a depreciation schedule that had to be booked exactly correctly, or you don't get all the depreciation, you don't get the greatest benefits. So it means to put the investment on a balance sheet instead of the expense and income statement. You'd be shocked how many times your bookkeepers, you think they know, but they don't. This is why being on my channel every day, 5 days a week, has you as the business owner or wealth builder or whatever you're here learning about, which is anything money. You've got to have enough knowledge to at least lead and review, right? I would say trust and verify. You can trust that your bookkeeper and your CPA know what they're doing. You need to have it verified. And I have a whole team of experts can help you verify they're doing it correctly. This is typically done when the asset is provided long-term benefits to the company, such as property, equipment, and software. And all of them have different depreciation schedules depending on what state, depending on the country. When an asset is capitalized, it is depreciated over time, meaning the cost is spread out over its useful life. For example, if you buy a $50,000 piece of equipment, whatever that is, and expect it to last for 10 years, then you would capitalize it, record it as an annual depreciation at $5,000 a year. So this is a very specific thing. You say, well, why are you talking to all of us general people about it? Because if you are the business owner or even just a real estate investor, you have to manage it. Gas and oil investors, it's shocking to me how many times a CPA has no idea how to capitalize or do the depreciation schedule across your property. Even if you do a home improvement, that's capitalization. And then again, when you sell it, if it's not been recorded properly, you're not getting all the tax benefits. So it is really important, and you can't just assume that your accountant is going to handle this property. You need to know enough about it. So let's keep going. The benefits of capitalization, right? The benefit of capitalizing your asset, it provides more accurate representation of your current financial situation because you're spreading out that cost over time. It's just not 1 year taking the $50,000 hit. It's $5,000 per year for 10 years. It can help the company financial ratios, right? Assets to liabilities, and so you have a better debt ratio, which means you're more fundable. And finally, your additional capital assets can increase the company's net worth short term and reduce your expenses, increase your profitability. So it is about your P&L and your balance sheet all collectively. Many of you that are just renters, none of this applies to you because you're not even buying anything or investing in something. Inside your bank account, in addition to your operating account, those of you who do need to buy some software, you need to buy equipment, you want to buy a vehicle, you want to buy a plane, you want to buy real estate in the company, you want to start an additional capitalization account. And what I do with that is use it like an investment account. So take money out of your operating account, put it in the capital account, so you can actually start putting money away to accumulate the cash to buy the asset. Some of you, you're just taking out loans, paying a lot of interest. If you can get a loan with no interest, buy the whole thing right away and then depreciate it over time. So before I talk about the pitfalls and some of the other considerations, make sure you subscribe to this channel. If this one's not an exciting topic to you, I have tons of topics. I have hours and hours. I'm here 5 days a week with your business partners, your family. Invite your environment, your friends to be here. We're going to have a YouTube journal coming soon, and it's going to be really 52 weeks. What did you learn every day? What are you going to do every day? So you start building a plan around your shifts that you're going to be making in money and business. And if you really want to lean in, click on the link below, schedule time with my team and have an appointment. Come see what we can do for you to mentor and guide you. And if there's a topic that's not out here, go to the comment section and type it in. We'll be right back out with more videos educating you on what you're needing or wanting to learn. Let's go on. Why else would you need to capitalize an asset? Other considerations and pitfalls. It's most important that the accounting procedures and guidelines are being followed when you're capitalizing to avoid the misrepresentation. Especially those of you that are looking to like sell a company or have a big exit. All of these bookings need to be critical. When it comes to software and tech, it gets a little more sensitive, I'm going to say. Not more difficult, it's just more sensitive. So you have to make sure that you're actually booking that properly. Those of you that are raising capital and you have software or intellectual property or any sort of tech, you can't put that over here in a different company than the operating company and have people invest in an operating company when the asset is sitting in another company. It has to be all inclusive. Again, this is kind of an accounting lesson, but it's an important one. Those of you who actually want to use other people's money, want to capitalize. I'm working with a client right now who raises really, really high level roping and racehorses. The capital appreciation and asset schedule on that is so unique and so different, because horses are an asset. Racehorses are huge assets. Some of them are worth hundreds of thousands of dollars. How do you depreciate them? And if you don't bring them into accounting right and you sell them right, you're missing massive benefits. So if your accountant hasn't ever done this, call me. Call our team. We have awesome tax strategists who will help walk you through all of this. Now, before we leave all of this, I want to give you my $1 trillion tip. Of all the capital you need to invest in, for those of you that are at the beginning stages, it's human capital. You need to hire people who are not like you. Like I am clearly the teacher, the promoter, lead sales, right? I lead the money conversation. And I have a team around me that supports in all sorts of tech, copywriting, social media. I don't do all of this. I'm the content producer here on my YouTube channel. I have a whole team around me that supports how it gets posted, how it gets out here, how the algorithms all work, and that's across the board. Also in your accounting department. Even though I have an accounting background, I don't want to do accounting. So I hire people who have those skill sets. So human capital is one of your greatest things you will ever bring into your company and help you grow your company. So be wise about it. Do not hire in what I call your like kind. You hire someone just like yourself, you've just duplicated the same energy. You need well-rounded company, a well-rounded skill set inside your company. Human capital is at the top. And then as far as capitalizing those assets, believe me, many of you cannot figure out how to pay for your first person. I want you to all to go hire your first person. I don't care if they're $2,000 a month, $4,000 a month, and demand that your company, not you, the company makes the money to pay for them. They will pay themselves back and pay your company back in spades. So again, stay here every day. Go to askloral.com if you have any questions. Make sure you click on the link, get an appointment with our team, see how we can guide and mentor you. You have to become a client to use our expert teams of tax strategists and entity and trust specialists. So jump on in. Let's keep this conversation going. We'll talk to you tomorrow.